Hey everyone, welcome back to Corporate Decoder, where today we're diving deep into MicroVision's latest filing. Get ready, because we're about to uncover some not so laser sharp details about their financial health. MicroVision is asking its shareholders for a big favor, to approve increasing the number of available shares. This is like asking for a bigger piggy bank, but why do they need it? And what does it mean for current investors? That's what we'll find out. This filing is a Schedule 14A, which is basically a notice for an upcoming shareholder meeting. It outlines what's on the agenda and asks shareholders to vote on important company matters, including electing directors and making changes to the company's structure. The most important proposal is to increase the authorized shares of common stock from 310 million to 510 million. Essentially, MicroVision wants the option to issue 200 million more shares than they could before. This can be used for various reasons, like raising money or making acquisitions. The company's board of directors is recommending that shareholders vote for all the proposals. If you don't vote, or if your broker doesn't vote on your behalf, it can affect whether these proposals pass or fail, especially the one about increasing authorized shares. Each shareholder gets one vote for every share of common stock they own as of April 7, 2025, the record date. You can vote online, by phone, or by mail, but make sure your vote is in by 11:59 p.m. Eastern Time on June 5, 2025. Electing directors only requires that the people with the most votes win. A majority of outstanding shares voting yes is needed to approve increasing the total number of shares of stock MicroVision can issue. So if you don't vote, it counts as a no. It makes your vote extremely important. MicroVision's board has several committees overseeing different aspects of the company, including the Audit Committee, Compensation Committee, and Nominating and Governance Committee. These committees are made up of independent directors, meaning they don't have a financial relationship with the company that could bias their decisions. There are rules about related person transactions, meaning deals between the company and its executives or major shareholders. These deals have to be approved by the Audit Committee to make sure they're fair to everyone else. From what is written, there don't appear to be any such related transactions to worry about. Let's talk about who owns MicroVision. BlackRock and the Vanguard Group are big shareholders, owning over 5% of the company's stock. CEO Sumit Sharma owns about 1 million shares. It's good to know who has a significant stake, because it can influence the company's direction. MicroVision wants to increase the number of authorized shares. This would give them more flexibility to raise money, make acquisitions, or use shares for other corporate purposes. It could also dilute existing shareholders' ownership, so it's a big decision. If shareholders approve the increase, it doesn't automatically mean your shares are worth less. It just gives the company the option to issue more shares in the future, which could dilute your ownership. The board says they need this flexibility to pursue opportunities and stay competitive. MicroVision also wants to amend its equity incentive plan, which is how they compensate employees with stock. The goal is to attract and retain talent, but it also means issuing more shares, which, as we now know, impacts existing shareholders. They want to add 12 million shares to that plan for employee incentives. Now let's get into executive compensation. The goal of the compensation program is to pay people to attract and retain them and align their interests with you, the shareholders. Here is a peek into the summary compensation table. In 2024, CEO Sumit Sharma's total compensation was about $6.5 million. Anubhav Verma for mine $1 million, and Drew G. Markham, the general counsel, made about $1 million, and Drew G. Markham, the general counsel, made about $1 million. Also interesting is the value realized on vesting from shares that vest to these executives. Those are a bonus paid in shares, essentially for each executive mentioned. The filing also outlines what would happen if the executives were terminated or if there's a change in control of the company. This includes things like severance payments and accelerated vesting of stock options. For example, Sharma would get $795,000 in salary severance and $535,000 in salary severance and $530,000 in bonus severance for an unapproved reason to fire, as well as the benefits of some options. The ratio of the CEO's pay to the median employee's pay is about 63:1. This means the CEO makes 63 times what the typical employee at MicroVision makes. It's worth thinking about how this compares to other companies in the same industry. The pay versus performance analysis shows how closely executive compensation is tied to the company's financial performance, as well as to performance compared to others in the industry. It seems compensation dropped as financial performance dropped. MicroVision wants shareholders to ratify the appointment of Moss Adams LLE as their independent accounting firm. The audit committee recommends this, so it's likely to pass unless there's significant opposition. The company paid Moss Adams fees for audit and tax-related events in 2023 and 2024. The audit committee has reviewed Moss Adams' work and independence, so there shouldn't be any red flags there. So what's the story here? MicroVision is asking for more financial flexibility to execute its strategy. They're also making sure their executives are well compensated and aligned with shareholder interests. The question is, will shareholders agree that these moves are in the best interest of the company? Now, looking at these requests more broadly, MicroVision appears to be positioning itself for future growth. The need for more shares shows they're potentially looking at acquisitions or large investments, which could be positive or negative depending on how they're executed. Also, the executive pay does reflect the company's objectives and goals, although they have not been met for 2024. The compensation has been allocated. All in all, the best path is long-term focus and commitment. Tough thanks for long-term focus and commitment of T. Thanks for watching. If you enjoyed, please subscribe, like, and comment.